Hello, I am Precious Swain, owner of Anointed for Prosperity, Bookkeeping, and more. And today, we're going to talk briefly about electing to be taxed as an S-Corp. As always, I'm going to present the information from a verifiable source that you can go back and read later. But I just want those out there to understand what it means to become or utilize S-Corp as a foreign entity for being taxed. So let me share the information really quickly with you. So as we see, we're on irs.gov, and it has a whole section on S corporations. The first thing that I want to remind everybody is what exactly an S corp is. And S corporations are corporations that elect to pass corporate income, losses, deductions, and credits through to their shareholders for federal tax purposes. Shareholders of S corporations report the flow through of income and losses on their personal taxes and are assessed tax at their individual income tax rates. This allows S corps to avoid double taxation on corporate income. S corporations are responsible for tax on certain built-in gains and passive income at the entity level. So hold on. Let's take a quick pause for the cause. Understand that this means instead of the S Corp being taxed like the C Corp is taxed, the shareholders in the S Corp are actually taxed. C Corp is taxed, the entity is taxed instead of the shareholders. S Corp, the shareholders are taxed instead of the corporation. Why is that important? It's important because right now, what I'm seeing a lot of with people calling our office and bringing through their taxes and different things is they don't understand that. They have seen on Facebook, they have seen on Twitter, they have heard at business brunches, you must form a C Corp. It will save you money. That is not necessarily true. For the larger entities, this is true. It works really well. For the smaller entities, let me be a little more specific. For the one person entities, if you have taken the business income and taxes and passed it along to the shareholder to put on their personal taxes, guess who the shareholder is? The shareholder is you. So now it's not broken down into multiple layers because it's only you. So you carry the whole bulk of it either way. Whether you break it down as the S Corp, you break it down on a Schedule C, however you break it down, this liability still falls on you. This income is going to change your personal tax bracket and you'll be taxed based on your personal tax bracket, but you're still going to be taxed. So let's hop back over and take a little deeper look. Okay, so to qualify for an S Corp, according to irs.gov, which is who approves the applications, the corporation must meet the following requirements. Hold on. Let me stop right there. The corporation. So this is designed initially for corporations, C Corps, to elect to be taxed at the smaller level of an S Corp. Can an LLC be elect to be an S Corp? Yes. We'll go into that in a second. But the process originated for C Corps. And for the corporation to qualify, the C Corp must be a domestic corporation, meaning it must have been formed here in the U.S. Excuse me. It must have allowable shareholders. What are allowable shareholders? Individuals, certain trusts, certain estates. The shareholders cannot be partnerships, other corporations, or non resident alien shareholders. So, yes, when you have a corporation, you can have partnerships, corporations, non residents, different people that buy and hold shares in your business. But if you have that, then you will not qualify to be an S Corp. It will not be considered a small corporation or a small business corporate entity. You cannot have more than 100 shareholders. You can only have one class of stock. And for those familiar with corporations, a lot of times corporations have thousands, even millions of shareholders, and they have various classes of stock, some being basic minute, low price stock, with others being premium, even private stocks that come with more benefits involved to them. You cannot be an ineligible corporation to be a S Corp. What is an ineligible corporation? Certain financial institutions cannot be S corporations. Insurance companies and domestic international sales corporations cannot be considered S Corps. In order to become an S Corp, the corporation must submit a Form 2553. So a Form 2553 simply gives you the ability to elect to be a small business corporation. What are the filing requirements of an S Corp? Of course, for their taxes, they file an 1120S. For their estimated tax, they file an 1120W if they are a corporation. For employment tax, of course, they file the 941 or the 943 and the 940. For their excise taxes, they would go to the excise tax tablet, also available in the irs.gov, to determine which form they would use. Their shareholders would file a 1040 or a 1040 SR and a Schedule E and other forms referenced on the shareholders K1, because the shareholders will receive a K1 to be filed on their taxes. And for their estimated taxes, they would fill out a 1040 ES. This is important to know so that you're continuously in compliance. So let's take a look at what the 2553 looks like. The 2553 is the election by a small business corporation, which is what the S stands for. Of course, it's going to ask for the basic information. It's going to ask how you would like to use the selected tax year, by the calendar year, by the fiscal year, by the 52 to 50 week, 3-week period. It's going to ask you if you have more than 100 shareholders. It's going to ask who the legal representative is, of course. It's going to ask you for an explanation if it's late. It's going to ask you for your shareholders' information, all the way down to the number of shares that they own. It's going to ask you some other information. For the most part, you're going to fill this out and send this to the IRS and await its approval. So now let's take a look at the LLC filing. Before the LLC can file as S Corp, it first has to file as a corporation, well, it's going to have to file as a corporation. Okay. We know that an LLC with one person is considered a disregarded entity by the IRS and must file a Schedule C. We know that an LLC with two members is considered a partnership by the IRS and must file a 1065. We know that an LLC with multiple partners of any number is going to file a 1065. If they choose to be um, counted as a corporation, they would come over and they would file an 8832. The 8832 is the election to be treated as a corporation. The entity classification rules classify certain business entities as corporations. And when you go to do the 8832, which is your entity classification election, you would then send it, of course, to the IRS. This would then mean that the LLC would go from filing a 1065 to filing an 1120. Well, if the qualifying LLC elected to be an S-Corp, then they would file an S-Corp just the way a corporation would file the 1120S. Well, how do they go from being an LLC to an S-Corp without ever being a corp? They don't. They're going to do this 8832 entity classification first. That is their first step to moving into becoming considered for taxable purposes as an S corp. They first have to be considered as a corporation. As we see, the form is pretty basic. It asks for the name of the entity. It asks, is it late filing? They want to know the initial classification by the newly formed entity, or is this a change in a current classification? They want to know, has it been previously requested in the past 60 months? They want to know, was it accepted? Do you have more than one owner? Is it domestic? Is it foreign? If it's late, why it was late. And you're going to fill that out and send that to the IRS. Once you have filled this out and sent this to the IRS, and I will be honest and tell you, I would probably do both forms at once. And I would request the election change to the C Corp and include the 2553 to be moved over to the S Corp all at one time, just for the sake of time. Can it be done? Yes. Has it been done? Of course. Is it recommended for every business? No. Is it recommended for businesses with only one person involved? No. Why? Because the double taxation that you're trying to avoid initially, you're bringing upon yourself anyway. So then they say, well, the only way I can't employ myself as a sole proprietor. No, you can't. And I can't employ myself as a sole LLC. No, you can't. But I can employ myself as an S Corp. Hmm, yeah, true. But there's pros and cons to this. So I'm going to take a few quick seconds of your time just to go over a few things. When you file a Schedule C, and it takes out SE tax, self-employment tax. That self-employment tax that's being taken is Social Security, Medicare, the same way it would from your paycheck. The federal tax, of course, is calculated based on the total income and the tax rate that you fall in, right? So technically, you're going to pay into Social Security and Medicare through that SE tax. The same if you're a sole LLC on the Schedule C with the SC, is taking out the Social Security and the Medicare. Normally, we recommend that you pay yourself so that you're paying into Social Security and Medicare. So when you finally get older, if you don't have an awesome retirement plan, you at least have your Social Security. Social Security has a point system based on the returns that you have filed. You have to have X amount of points to be able to qualify for Medicare and Social Security. We'll talk about that in a whole nother class. So you want to be an S-Corp so you can pay yourself, so you can take out Medicare and Social Security and pay in federally like an employee, hoping to get a refund, I'm assuming. But the payment that you paid in for an employee does not offset that you're going to still have taxes on the income that you brought in. So you're almost setting yourself up for still double taxation because you paid yourself as an employee, and you're going to have your W-2, and you're going to put your W-2 in, and it's going to show what you paid out as an employee, and it's going to show what you paid to Social Security and Medicaid as an employee. And then boom, the income from your S Corp, because you're the only shareholder, still rotates back to you. And now this income still is it's still taxable. So now you're still going to have this tax from this revenue that you brought in. So even though it is taught, it is encouraged, I will say, and this is totally based on my opinion and 30 years of experience, if you are the only one in this situation and you choose to be an S Corp so that you can pay yourself, please go in there knowing that it's really no benefit, really. You're going to end up with still some tax. Now, will you have some liability? It depends on your credits. So it may do a wash, or you may have all kind of credits and you still may receive a refund. But in essence, if you don't have the credits and you don't have the different things to offset, you can end up still owing a liability. Please keep that in mind when moving forward, and make sure that you're speaking to your financial advisor, your accountant, your whoever, when you are setting this up to make this make sense. I hope this helps someone. I'm hoping that this helps you to make more educated decisions before making the change, because yes, in some situations, being an S Corp is really needed. It's really beneficial, and it really helps from a tax standpoint. In other situations, there are other options available that may work better. So make sure that you're looking at all of your options before making a decision. Again, I am Precious Swain Peaks, owner of Anointed for Prosperity, Bookkeeping, and more. If you have any questions or would like to book a free consult, definitely go to anointedforprosperity.com. If you just want to shoot a message or two, let's connect. I'm on Instagram at precious_Swain. Have an amazing day, and make sure everything you do in your business, you do after research and prayer.